we have Mr. Sushil Suri, who is the chairman and managing director of the company. Welcome, Mr. Sushil.
Thank you very much.
Well, I just wanted to know about the whole QIP, why you've raised rupees 200 crore, where you're going to spend this money into?
Yeah, Varsha, first of all, I would, through your platform, I would like to thank all the investors, all the stakeholders, and more particularly the institutional investors who have gracefully participated in this long awaited capital raise. So, we had only 4% institutional placements, institutional holdings in our company, and now that have gone to more than 10%. So, that's a big, I would say, grateful moment for the company to thank all the institutional investors who have put their faith in the company. So we had an overwhelming response, and against our 200 crore offering, we had got 335 crore rupees. So which is almost 1.68 times of the offering. So at the last minute, we had to take a call that okay, should we take more money? But internally, we could see that 200 crore is what we all need for the immediate growth plans. And coming specifically to the point that okay, why we are in the QIP and what do we need with, where do we go with the money? So Varsha, we had been growing at a very aggressive rate last couple of years, and the company as a whole we have been growing at a CAGR of 17-18%, as against the industry average of maybe 10 to 12%. We have extra growth, and within the pharmaceutical space we have API business which was growing at 17-18%, but our medical devices business have been overshooting, and we had got 27 to 28% CAGR year after year. So we could see that okay, now we have a growth plan, and India is booming as a manufacturing hub. So we could see that okay, there is an opportunity for India to consolidate and create a position. We hadn't had a capital event for the longest time, and all the growth we were doing was from the internal accruals. And we are a debt-free company, so we never had any big investment in the, even in the capex also and the working capital also. So now to capitalize on what the market opportunity is, so we approach the market and particularly the institutional investors that we think need to think and plan for the long term. And for long-term investor, we needed institutional investors to support us. Naturally, we presented our case. So here we are that all the big boys, all the, I would say, big names, whether it is Citi, Nomura or Bank of America, Morgan Stanley, everybody is now there on our cap table. So we certainly had around 3.5-4%, including domestic institutions. Now Society General, Samsung India, Citi, all these people have participated. So this gives a good, I would say, both responsibility also and impetus also to the company, that we have all these people who will support us and I would say monitor us also, and we are happy to have these people on the table. And I would like to say through your platform again, right, to welcome all the new investors on the board of Morepen, so that we can go together and create a better future. So coming specifically to the businesses, as I told that API business had been growing very smoothly, 17 to 18% CAGR, a compounded annual growth rate. There, Varsha, we have got 7-8 products where we are the market leader. 6 products are there, we are number 1 to number 3, 4. 3 products we are number 1. Loratadine, Desloratadine, Montelukast, we are the market leaders globally in terms of the capacities. And now what we see is that another 3 products where we are number 3rd or 4th, there also we can be 2nd or 1st if we try to do that. Atorvastatin, Fexofenadine and Rosuvastatin. So what we are trying to do is build more capacities for the products what we already have, so that we can gather the more leadership position. And more importantly, Varsha, is that we try to do more of new molecules. So API is all about new molecules and research and having processes and patents which are unique. So we are now trying to make a strategy, or rather I would say formulated a strategy, that we need to expand our capacities. We have a limited capacity, only 400 kiloliters, and that capacity is being added to 600 kiloliters, from 400 KL to 600 KL. And this will give us an enhanced presence in the market in terms of our delivery, addressing to the customers. We are exporting to 80 countries already, and there is a phenomenal rate of growth in almost all the continents, whether it is US or Europe or Middle East or Asian countries. We have been growing consistently over all the countries. So now what we want to do is to cater to all the growing needs. We need to build more capacities. Very simple thing. We have to do more of what we are already doing.
Mr.
So second, this
Yeah, please go ahead. Please go ahead.
yes. So here, Varsha, our capex requirement for the API division is 75 crores, and out of the 200 crores after expenses, we get 187 crores. 75 crore goes to capex of the API division, and then the second division, which has been giving, I would say, phenomenal and interesting growth, is medical devices, as I shared with you. So there we have two leading products or lead products, I would say, glucometer and BP monitors. We are market leaders in both BP monitor and gluco monitors, and in both the cases, we hold good presence in the market in terms of shares and the growth also. So glucometers, we have around 1.2 crore meters already installed in the market, and which becomes our customer base. And of course, we keep on supplying strips year after year. So it all depends how much market base we have, how much customer base we have. So around 11, 12 million customer base we have got, which is, I would say, feeding our regular sales. So we are increasing the capacity of glucometers. So we have end-to-end backward integration in glucometers. We manufacture it from bare chips. So we have our own SMT machines, we have assembly lines, we have injection molding machines. So we are fully integrated in the medical devices, and now we are adding more machines so that we can supply more and more medical devices to the whole world. And India being the hub of the world, so once we build larger capacities, we want to make our space for the global capacities also.
Well,
That's
Mr. Suri, I understand that, but one question that I had was, I don't want any kind of guidance to this, but the company has achieved a CAGR growth of around 16 to 17%, as you rightly said. Now, looking at the long-term perspective, not the shorter term, do you believe that company can achieve growth rates exceeding this number, considering the QIP that you have been doing?
look, as you said that I'm not saying that it's a guidance, but I would say that is an effort, and that is a whole pretext what we are working upon. That if we have to continue on this growth, so it was not possible without additional capital. So that is where we need to have a capital raise. That is where we need to have, I would say, more new product portfolio, new markets, and of course, more control. And I would say, depending on the way India is having an opportunity. So we are at the opportune time. Of course, we all know that China is disturbed, and of course, we do have impact of the Chinese raw material supply. The prices are up and down. But we are, as a Morepen, we are seeing a lot of opportunities, and we are hopeful that we will be able to maintain this ratio. Whether it is 15 or 16 or 17, these exact numbers actually no one can predict, but we see a lot of opportunities.
Also, who would be your large and branded players in this medical devices space, and also a lot of EMS companies are coming into this space. So, how do you see competition as a whole for your company?
Varsha, basically this line is very technical, so I will not count these EMS companies to be part of this, because this line needs a lot of trust. This is not just a device. So as Morepen, as Dr. Morepen is a brand, we have established this Dr. Morepen brand since last 24 years now. So people believe on us, people rely on our service, and it's all service oriented thing. It's not like you just pick up any fixed thing from a toy store and okay, that's it. But what we do is a lifetime free replacement of the meters. We have service centers all over the country. So, and of course, we go through pharmaceutical this trade. We go through distributors, pharmacies, and all that. So EMS companies are not my competition. But coming specifically to the pharma competition, the one big company is an international company, and you might be knowing it's Roche, who has been neck to neck, and they are there since last 30, 40 years. So I won't say that they are big or I'm small, but they are there in the market. But of late, we have been able to surpass the number of meters supplied and number of strips supplied in the market. And of course, we are gaining share day by day. So I don't have any official numbers that what's the market data, but our share is between 20 to 21%, and I'm assuming a equivalent share with them. So rest all is a long tail. This long tail is what has been typically available during seasonal time. During COVID time, many companies had come, and many companies have folded after that. And one of our companies in our Parvanu Baddi neighborhood, they came during COVID, they folded within 1 year. So I would say though that's a long tail. I don't see that as a competition. But as Morepen, we have been able to build a very beautiful model wherein not many companies are there, unlike a typical pharma where we have 50, 60, 100 brands of one particular thing. Here we have one or two brands. Of course, we are in a competitive market, but India is the diabetic capital of the world. And of course, so is the largest number of cardiac patients in the world. So we see a lot of opportunity in this market, and it's a niche market, and it's early days, I would say, but the growth potential would be much higher. So that is where I say that this has been growing at a CAGR of 27, 28%. So I think that's an interesting thing. If we, in today's age, we get some business which grows at 37, 38%. Last year, medical devices grew 35%. So of course, it's a smaller base of previous years, but we are comfortable and confident on this part.
Okay, Mr. Suri, so we leave it at that. Thank you so much for joining us, and well, all the best for your future plans with respect to the company.